Hello. Good day to all the listeners out there. Welcome to the Daily Wrap. I'm Anton. Quick reminder, everything here is for education and entertainment, not financial advice. I'm not a licensed advisor. Do your own research or talk to a licensed professional before making any investment decisions. Today was day 2 of a tech and semiconductor sell-off, and it got worse. Nvidia, AMD, and Micron all took significant hits. FedEx reported after the bell and beat estimates, but the stock still fell. We have a lot to cover. Let's go into it. Starting with the scoreboard, all 4 indices finished in the red today. The S&P fell 1.4% to 7,365.46. The Nasdaq dropped 2.21% to 25,587. The Dow barely moved, down just 0.09% to 51,666, and the Russell 2000 ETF fell 0.96% to 295.32. This was day 2 of a tech sell-off. Yesterday it was the broader tech names. Today it deepened into semiconductors specifically, that hit the Nasdaq harder than anything else. The context here matters. The Nasdaq had gained 26% from March 30 through yesterday's close. The chip sector had more than doubled over the same period. That kind of run creates a lot of paper gains sitting on the table, and investors were taking some of that off. First story, and this is the one that drove everything today. Semiconductor stocks got hit hard. Micron fell more than 10%, SanDisk nearly 12%, AMD down 5.5%, Nvidia dropped 4.2%. Broadcom fell 3%. 3 things triggered this. First, Broadcom's recent earnings call. They report record AI chip revenue up 143% year over year, but maintained their 2027 AI outlook rather than raising it. In a market where chip companies are expected to constantly beat and raise, maintaining guidance was read as a warning sign. Second, the U.S. government expanded export controls on advanced AI chips to now include offshore subsidiaries of Chinese parent companies, choking off key distribution pathways for AMD and others. Third, memory chip supply chains are under strain. The spot price of high bandwidth memory has roughly tripled, compressing margins for producers like Micron. The broader context, the Philadelphia Semiconductor Index had gained over 100% from March 30 through last week. At those valuations, even a modest negative catalyst can trigger a sharp reversal. Second story, the bigger picture behind today's sell-off. The question markets are starting to ask is whether the AI investment story has run ahead of the underlying reality. Put the numbers in context. The Philadelphia Semiconductor Index gained over 100% from March 30 to last week. The Nasdaq was up 26% over the same period. That's an extraordinary run in a short time. When stocks are priced for perfection, any sign of doubt can trigger a sharp reset. 3 concerns are converging right now. First, the profitability question. Companies like Alphabet and Meta are spending hundreds of billions on AI infrastructure, but investors are increasingly asking when that translates into revenue growth. Second, the Fed's hawkish turn. Traders now see a 90% chance of at least 1 rate hike this year. That was only 57% a week ago. Higher rates make future earnings worth less today, which directly hurts the valuations of high multiple tech stocks. Third, the expanded export controls on AI chips cut off meaningful revenue channels for semiconductor companies selling into China. These 3 forces combined are making investors reassess how much they're willing to pay. Third story, FedEx reported after the bell tonight. Strong results, adjusted EPS of $6.31, well above the $5.96 estimate. Revenue hit $25 billion, up 12.5% year over year, a clear beat on both top and bottom line. And the stock fell 6% in after hours. This is one of the most common patterns in earnings season, and it's worth understanding. Markets don't just react to beat or miss, they react to what's next. Investors had already priced in a strong result. The surprise was in the guidance. stranded costs from the FedEx freight spin-off complete June 1st, a new pilot contract adding near-term cost pressure, and management flagging global trade policy changes as a headwind. The calendar year 2026 EPS guide of $16.90 to $18.10 was bad. It just wasn't enough to justify the run-up going into the print. This is what buy the rumor, sell the news looks like in real life. Looking at the rest of the week, tomorrow Wednesday, the biggest event is Micron's earnings. Micron fell over 10% today. So what management says tomorrow about memory chip demand, margins, and AI infrastructure spending is going to be closely watched by the whole sector. This is the most consequential earnings report of the week, given everything that happened today. Also Wednesday, the Federal Reserve releases its annual bank stress test results. This determines how much capital major banks like JP Morgan, Bank of America, and Goldman Sachs can return to shareholders through dividends and buybacks. And then Thursday, May PCE inflation data alongside the final Q1 GDP estimate. With rate hike odds now sitting at around 90%, this print could move markets significantly in either direction. A hotter than expected read could accelerate the tech sell-off. A cooler print might bring relief. That's the daily wrap for June 23rd, day 2 of the tech and semiconductor sell-off. Micron down 10%, AMD down 5%, Nvidia down 4%, and as AI valuation concerns, export controls, and rising rate hike odds converge, FedEx beat earnings but fell 6% after hours on guidance. A reminder that beating estimates isn't always enough. Micron reports tomorrow, PCE on Thursday. Bye now, have a good day.